Question 8. Does Ether Futures ETF contribute to portfolio diversification? Ether Futures ETFs can potentially contribute to portfolio diversification, but it depends on your existing holdings and risk tolerance. Here's a breakdown of the arguments for and against it. Arguments for diversification. Different asset class. Cryptocurrencies like Ether represent a different asset class compared to traditional stocks, bonds, or commodities. Including them in your portfolio can potentially reduce overall portfolio risk by introducing assets with a low correlation to your existing holdings. Hedging potential. In theory, the price movements of Ether might have a low correlation with traditional asset classes. During periods of economic downturn, when stocks and bonds might decline, Ether's price could potentially behave differently, offering some level of hedge against those downturns. Arguments against diversification. High volatility. As mentioned previously, the cryptocurrency market is known for its high volatility. Including Ether Futures ETFs can significantly increase the overall risk profile of your portfolio, potentially negating any diversification benefits. Limited track record. Ether Futures ETFs are a relatively new investment vehicle. Their historical performance data is limited, making it difficult to assess their true diversification potential over a complete market cycle. Indirect exposure. These ETFs offer indirect exposure to Ether through futures contracts. The tracking imperfections, due to contango and other factors, can further complicate their role in portfolio diversification. Additional considerations. Risk tolerance. Investors with a high risk tolerance might find Ether Futures ETFs suitable for a small allocation within a well-diversified portfolio. Correlation over time. The correlation between Ether and traditional assets can change over time. Monitor market trends to assess the potential diversification benefits at any given point. Alternatives. Other asset classes with potentially lower risk profiles, like real estate or commodities, could also be considered for diversification. Question 9. Are there other ETFs with similar objectives of Ether Futures ETF, but lower expense ratios? Yes, there are a few Ether Futures ETFs currently available, and some do boast lower expense ratios compared to others. Here's a breakdown. Current landscape. Limited options. As of March 17, 2024, there are only a handful of Ether Futures ETFs in the market. This is due to the relatively new nature of these investment vehicles. Expense ratio comparison. While some options exist, the differences in expense ratios might be relatively small at this stage. Here are a few examples. OVANEC Ethereum Strategy ETF, EFUT, expense ratio of 0.66%, as of March 15, 2024. ProShares Ether Strategy ETF, EETH, expense ratio of 0.95%, as of March 15, 2024. Bitwise Ethereum Strategy ETF, AETH, expense ratio of 0.85%, as of March 15, 2024. Question 10. Could a combination of individual stocks or other ETFs achieve a similar outcome with potentially lower costs or greater control? Yes, a combination of individual stocks or other ETFs could potentially achieve a similar outcome to an Ether Futures ETF with potentially lower costs and greater control. However, it's important to understand the trade-offs involved. Ether Futures ETF Convenience offers a single investment vehicle for exposure to Ether's price movements. Regulated environment trades on regulated exchanges, potentially appealing to some investors. Limited control investors don't directly own Ether and have limited control over the underlying futures contracts. Fees expense ratios associated with managing the ETF. Combination approach greater flexibility. You can choose individual stocks or ETFs that align with your specific investment thesis on the future of the cryptocurrency market or blockchain technology. Potentially lower costs. Individual stock or ETF fees might be lower compared to some Ether Futures ETFs expense ratios. Direct ownership. In some cases, you might be able to directly purchase Ether, offering more control over your investment, though with additional security considerations. Increased complexity requires more research and management to select and monitor individual stocks or ETFs. Potential for diversification. You can combine exposure to Ether with other asset classes within your portfolio for better risk management. Here are some specific alternatives to consider. Individual stocks. Invest in companies that are heavily involved in blockchain technology or the development of the Ethereum ecosystem. However, this approach requires significant research to identify suitable companies and understand their specific business models and risks. Blockchain ETFs. Some ETFs focus on companies working within the broader blockchain technology space, offering exposure to a basket of companies that might benefit from the growth of Ethereum and other blockchain applications. Cryptocurrency funds. These might offer more direct exposure to cryptocurrencies like Ether, potentially with lower fees compared to some Ether Futures ETFs. However, these options might be less regulated and involve different security considerations. Question 11. What are the pros and cons of this Ether Futures ETF compared to similar options? Comparing Ether Futures ETFs, pros and cons. Since the Ether Futures ETF market is still relatively young, the number of available options is limited. Here's a framework to compare different Ether Futures ETFs and identify potential advantages and disadvantages. Factors to consider. Expense ratio. This is the annual fee charged by the ETF for managing the fund. Lower expense ratios translate to higher returns for investors. Underlying index. Each ETF tracks a specific index based on Ether Futures contracts. Analyze the specific index methodology and potential tracking differences. Liquidity. The ease with which you can buy and sell ETF shares on the exchange. Higher liquidity allows for easier entry and exit from the investment. Management track record. Consider the experience and reputation of the ETF issuer and their track record in managing similar funds. Unique features. Some ETFs might offer additional features, like automatic reinvestment of dividends, not applicable to Ether Futures ETFs, or specific focus areas within the Ethereum ecosystem. Here's how you can use this framework to compare specific Ether Futures ETFs. 1. Gather information. Research the available Ether Futures ETFs and collect data on expense ratios, underlying indices, liquidity metrics, and issuer information. 2. Prioritize factors. Determine which factors are most important to you. Investors seeking the lowest cost might prioritize expense ratio, while others might value a specific index methodology or a reputable issuer. 3. Compare options. Line up the gathered data for each ETF and compare them based on your priorities. Question 12. What are the potential benefits and drawbacks of investing in Ether Futures ETF compared to individual stocks within the same sector? Here's a breakdown of the potential benefits and drawbacks of investing in an Ether Futures ETF compared to individual stocks within the blockchain or cryptocurrency sector. Ether Futures ETF benefits. Convenience and diversification. Offers a single investment vehicle for exposure to Ether's price movements, providing instant diversification within the Ethereum ecosystem. Regulated environment. Trades on regulated exchanges, potentially appealing to investors seeking a familiar and secure trading platform. Lower investment minimums. Allows participation with potentially smaller investment amounts compared to buying individual stocks. Professional management. ETF managers actively oversee the fund and handle the rebalancing of futures contracts. Drawbacks. Limited control. Investors don't directly own Ether and have no control over the selection of underlying futures contracts within the ETF. Fees. Expense ratios associated with managing the ETF eat into potential returns. Indirect exposure. Tracks Ether's price movements indirectly through futures contracts, leading to potential tracking imperfections due to contango and other factors. Limited growth potential. Ether Futures ETFs typically don't capture potential stock appreciation beyond the price of Ether itself. Individual stocks. Benefits. Greater potential returns. Direct ownership of stocks allows investors to benefit from potential company growth beyond just the price of Ether. Stock selection. The ability to research and choose specific stocks within the blockchain or cryptocurrency sector that align with your investment thesis. Potential for dividends. Some companies within the sector might offer dividend payouts, providing an additional income stream. Voting rights. In some cases, owning stocks might come with voting rights, allowing you to participate in company decisions. Drawbacks. Higher risk. Investing in individual stocks typically carries a higher risk profile compared to a diversified ETF. Increased research. Requires in-depth research and analysis to identify suitable stocks and understand their specific business models and risks. Management responsibility. Investors are responsible for monitoring their stock holdings and making investment decisions. Higher investment minimums. Buying individual stocks might require larger investment amounts compared to an ETF, especially for high-priced stocks. Choosing between the two. Risk tolerance. Investors with a lower risk tolerance might favor the diversification and convenience of an Ether Futures ETF. Investment goals. Those seeking potential for higher returns and the ability to capitalize on individual company growth might prefer selecting stocks. Investment time frame. For a long-term investment strategy, individual stock selection could be more rewarding, while shorter-term investors might find the ease of an ETF more appealing. Here are some additional points to consider. Market volatility. During volatile periods, the price movements of individual stocks can be more amplified compared to an ETF. Liquidity. The liquidity of individual stocks can vary significantly. Less liquid stocks might be harder to buy and sell at desired prices. Diversification. Consider combining an Ether Futures ETF with a broader technology or blockchain ETF for a more balanced exposure. In conclusion, both Ether Futures ETFs and individual stocks offer different approaches to gaining exposure to the blockchain or cryptocurrency sector. The optimal choice depends on your risk tolerance, investment goals, and preferred level of control over your investments. Question 13. Does Ether Futures ETF offer a unique exposure that wouldn't be easily replicated through other holdings? An Ether Futures ETF offers some unique exposure features compared to other investment options, but it's not entirely irreplaceable. Here's a breakdown. Unique exposure elements. Direct exposure to Ether Futures. Ether Futures ETFs provide a convenient way to gain exposure to Ether Futures contracts themselves. These contracts offer a leveraged play on the price movements of Ether, something not achievable through directly buying stocks or most other ETFs. However, the indirect nature of Ether's price tracking introduces limitations. Imperfect tracking. The ETF tracks Ether's price indirectly through futures contracts. Factors like contango, where futures prices trade higher than the spot price, can cause the ETF's price to deviate slightly from the actual price movement of Ether. Alternative exposure options. Direct Ether ownership. For the most direct exposure, you could consider purchasing Ether directly through cryptocurrency exchanges. This approach offers full ownership and potential for appreciation beyond just the price movements. However, it comes with additional security risks and potentially less regulation compared to ETFs. Grayscale Trusts. Investment vehicles like Grayscale Ethereum Trust, ETHE, hold underlying Ether. While not technically ETFs, they offer a more indirect way to gain exposure to Ether with potentially less volatility compared to futures contracts. However, these trusts might have higher fees and lower liquidity. Uniqueness versus alternatives. Convenience and regulation. Ether Futures ETFs offer a balance between convenience and regulation. They are easier to access for most investors compared to directly buying Ether and trade on regulated exchanges. Leveraged exposure. The leveraged nature of futures contracts within the ETF provides a unique exposure characteristic not easily replicated through most traditional stock or bond ETFs. In conclusion, while Ether Futures ETFs offer a distinctive way to gain exposure to Ether through futures contracts, they aren't the only option. Consider your risk tolerance, investment goals, and desired level of control when choosing between an Ether Futures ETF, directly owning Ether, or alternative investment vehicles like Grayscale Trusts. Alright chat ETF fam, that's all we have on Ether Futures ETFs. So, to recap, exposure to Ether. These ETFs offer a way to gain exposure to the price movements of Ether, without directly owning the cryptocurrency itself. Leveraged play. Thanks to futures contracts, they can amplify your gains and losses, compared to just buying Ether. Convenience and regulation. They trade on regulated exchanges and are easier to access for most investors compared to directly buying Ether. Tracking imperfections. The indirect nature through futures contracts can lead to slight deviations from the actual price movement of Ether. Alternatives exist. Consider direct Ether ownership, Grayscale Trusts, or a combination of ETFs for broader exposure. The key takeaway. Ether Futures ETFs can be a powerful tool, but they come with their own set of risks and considerations. Before diving in, make sure you understand your risk tolerance and investment goals. Consult a financial advisor if needed, and remember, diversification is key. So, what are your thoughts on Ether Futures ETFs? Let us know in the comments below. And don't forget to like this video and subscribe to the Chat ETF channel for more in-depth investment explorations.